Now we look at what is the hedging. So hedging means it is some sort of establishing and offsetting currency position so as to lock in home currency value for a future currency, whereby eliminate the risk posed by currency fluctuation. Actually, what we are doing in hedging is we try to lock the foreign currency value, or we try to lock the exchange rate until we set off the transaction. That is what we are doing in forward market, currency futures, and currency options. Okay, so the basic purpose of hedging is to reduce exchange risk. Hedging එක අපි ඇත්තටම මොකක්ද කරන්නේ? Hedging එක අපි ඇත්තටම කරන්නේ exchange rate එක lock කරනවා. Right? So if you remember what we discussed in the forward market, right? I forward market එක කතා කරපු එක මතක ඇතිනේ ඔයගලන්ට. So we enter into the agreement today, right? This is today, right? We enter into the agreement, forward contract or currency future contract or currency option contract to set off the transaction after 3 months, right? With the pre-agreed buying or selling rate for a particular foreign currency. අපි අද ඇග්‍රි වෙනවා තව මාස 3ක් යනකොට අපි එක්කෝ ෆොරින් කරන්සි මිලදී ගන්න එහෙම නැත්නම් ෆොරින් කරන්සි විකුණනවා මෙන්න මේ අද ඇග්‍රි වෙච්ච රේට් එකට. So what is that pre-agreed rate? So that pre-agreed rate mean the locking rate, right? Because it's not going to be changed after 3 months. ඒක මාස 3ක් ගියාට පස්සේ වෙනස් වෙන්නේ නැහැ. That is why we call the hedging as the locking of exchange rates between two currencies. Okay, so there are a variety of hedging techniques we can see. Okay, hedging in forward market, maybe hedging in money market. Right, there are so many hedging agreements, hedging techniques. But before the firm use them, it must be decided on which risk to manage and how to manage them. Therefore, when we are going to manage risk, right, first of all, we need to know exactly what type of risk we are going to manage. Either it is a translation risk, or it is a transaction risk, or it is an economic risk. So, මොන risk එකද minimize කරන්න manage කරන්න යන්නේ කියන එක දැනගෙන ඉන්න ඕනේ. Because based on the risk type, the hedging options can be changed. Okay. Though exchange rate may move in the future, hedging needs to arrange a firm financial affairs in such a way that the effect on currency return are minimized. Right? So hedging is give us a guarantee that the exchange rate fluctuation risk is going to be minimized if you are using hedging as a risk minimizing approach. Okay, so firm allow a selective hedging policy designed to protect against anticipated currency movement. So in our next slides, we will discuss how this hedging policy is going to be changed by looking at different economic signals. Right, එක signals බලලා අපිට මේ hedging agreement වෙන හදා ගන්න පුළුවන්. Okay, right. Now the simple meaning of hedging is, what is that? Hedging is some sort of technique or some sort of approach we are using to minimize foreign exchange risk, right? Actually, in hedging, what we are doing is we are going to lock the currency values until we set off the transaction, right? So then we eliminate the currency fluctuation where we can see from the transaction happening and the transaction set off time. So transaction එක වෙන දිනේ සහ transaction එක set off time එක වෙනකන් වන exchange rate fluctuation පුළුවන් තරම් minimize වෙනවා අපි hedging contract වලට යාම තුල. Right? That is a simple meaning of hedging. Okay. So hedging, as I mentioned you, hedging has to be, before when we are entering into the hedging techniques, right? Like I mentioned, there is a money market hedging, there is a forward market hedging, right? So many things are there. Before moving to the different hedging techniques, it is compulsory to know which risk we are going to manage. Either we are going to minimize translation risk, or we are going to minimize transaction risk, or we are going to minimize economic risk. Okay, so we know translation risk. The common goal necessitates the complete focus on protecting foreign currency denominated assets and liabilities from changes the value resulting from exchange rate fluctuation. Now we know what is the translation risk, and we also know what is the transaction risk. Okay, and also we know economic risk. Okay, right. Now let's look at first one, how we are using hedging or hedge to minimize or managing translation risk. Right? මොනවගේ අවස්ථාද අපිට use කරන්න පුළුවන් translation risk එක manage කරන්න. එහෙම නැත්නම් translation risk එක minimize කරන්න. Okay. One technique we call adjusting fund flows. One technique we identified as adjusting fund flows. What is the adjusting fund flows? Okay, so it involves altering either the amount or currencies of the planned cash flows of the parents or its subsidiaries to reduce firm's local currency. Right? When we are making the translation, that we know when the translation time exchange rate can be fluctuate. As a result of the fluctuation, as we identified through the exhibit 10.201, I don't remember exactly that exhibit, we see how the values are changed as a result of depreciation of the domestic currency. Okay, so in order to overcome that, okay, so they can ask, so they can take the funds, or they can get in the fund flow from their parent company or subsidiaries to reduce that firm's local currency fluctuation. Right? අපිට එතකොට cash pump කරගන්න පුළුවන් parent country එකකින් හෝ subsidiaries වලින් අර local currency fluctuation එක අඩු කරගන්න. Okay, so the one strategy they are using is pricing export in foreign currencies and imports in the local currency. So ඒගොල්ලෝ export price කරනවා foreign currencies වලට, import price කරනවා local currency වලට. Right? So invest in the foreign currency securities and replacing the foreign currency borrowing with the local currency loans. Right? There are so many strategies they can use. They can either pricing export in foreign currencies and import in local currencies. Then it will set off the difference between local currency price with the foreign currency price. Then metana difference is set off. Or they are investing foreign currency securities and replacing that amount with the foreign currency borrowing. Right? So they are taking loan from the local currency and they are buying foreign currency securities. So ඒගොල්ලෝ මොකද කරන්නේ? සමහර තවත් වෙලාවකට ඒගොල්ලෝ කරනවා local currency වලින් loans අරගෙන ඒ local currency loan එක use කරනවා foreign currency securities මිලදී ගැනීමට. Or they are taking replacing foreign currency borrowing with the local currency loans. Okay, so ආකාර කීපයකට ඒගොල්ලන්ට adjust කරගන්න පුළුවන් funding. So this is also we call hedging. Right? This is some sort of hedging because they know exactly how much they are going to pay in the local currency values, right? And they know how much they are receiving in the foreign currency values in future. Right? So they lock their asset value and liability values in a particular currency with the transaction in two different currencies. So liabilities value එක currency එකකිනුත් assets value එක තව currency එකකිනුත් අපි ඒගොල්ලෝ deal කිරීම තුල ඒගොල්ලෝ adjust කරගන්නවා fund flow එක. So this is one sort of hedging they are using to manage translation risk. Other one is we already know that they can enter into the forward contract. Right? So forward contract can reduce the firm translation risk by creating and offsetting assets or liabilities in foreign currency. Now this example is given in your textbook also. Suppose that IBM in UK has translation exposure of pound 40 million. That means when they are trying to translate in their assessed value and liability values, right? In UK to USA, there is some translation risk with pound 40 million. That is, their sterling assessed values are exceeding sterling liability values. So, ඒගොල්ලෝ දකිනවා ඒගොල්ලෝගේ value translation එක යනකොට ඒගොල්ලන්ගේ pound වලින් ගන්න sterling assessed value එකයි pound වලින් ගන්න sterling liability value එක අතර වෙනස pound million 40ක් තියෙනවා. Right? So they are taking this pound million values and they try to make selling it at a forward market. So මේ pound million 40 ඒගොල්ලෝ sell කරනවා forward market එකකින්. Right? Then they know exactly at the end how many dollars they will receive when they are going to complete the translation process. The translation process එක එනකොට ඒගොල්ලෝ ළඟ යම් කිසි හුවමාරුවක් ඒ කියන්නේ assessed values නැවත translate කරනකොට IBM එක USA values US dollars වලට අපි දන්නවා IBM එක US company එකක්. ඒකට ඒකේ තියෙන එක branch එක UK වල තියෙනවා. ඒකට ඒගොල්ලෝ accounts හදනකොට ඒගොල්ලෝ දකිනවා sterling ඒගොල්ලන්ගේ assessed value එක liability value එකට වඩා වැඩි pound million 40කින්. ඒතර මේ pound million 40 දැන් අද තියෙන value එකේ තමයි වැඩි වෙලා තියෙන්නේ. Right? But when they are doing the translation, they don't know what will happen to that 40 million. What they are doing is they enter into the forward contract to sell that $40 million and convert it into the dollars. Pound 40 million to convert it into dollar. Right? එතකොට යා translation එක සිද්ධ වෙන වෙලාවේ එයා ළඟට හම්බ වෙනවා මේ 40 pound million 40 translate කරලා ගන්න dollars ගන්න. Then they can set off that translation risk. Translation risk. එහෙම තමයි translation risk එක set off කරන්නේ. Okay, so this is the way they can use different technique for managing translation risk. Okay, and the other thing is the exposure netting. Right. So this is another kind of thing that companies can use to minimize translation risk. That is also one sort of hedging activity. Okay, so it involves offsetting risk in one currency with the risk in the same or another currencies, where exchange rates are expected to move in a way such that losses on the first exposure position will be offset by gain on the second currency risk. So in order to set off the one currency translation risk, they are making another one or two currencies. Right? එතකොට මේගොල්ලෝ කරන්නේ මේක මාරු කරන්න translation එක කරන්න හදනකොට exchange rates කීපයක් use කරනවා. Right? They are using currency portfolio or exchange rate portfolio. When in that time some currencies might be appreciate and some currencies might be depreciate. Right? So using the depreciation, they are making losses, but using the appreciation, there may be loss, there may be profit. Then the losses occurring with the depreciation as well as the profit occurring with the appreciation, they set off the translation risk. And set off no translation risk. So the thing they are doing is they are using different currency rates or different exchange rates to make the translation. Okay. So these are the basic translation managing techniques using as the hedging options. Okay. So they try to lock the currency values. That is a basic purpose. Okay. And other one is the managing transaction risk. So what sort of hedging techniques or hedging approaches they are using to manage transaction risk? Right. Actually, the first two are the most common technique they are using to manage transaction risk. Those are very common hedging techniques we can see in transaction risk. මේ පළවෙනි දෙක තමයි ගොඩාක්ම අපිට බලන්න පුළුවන් transaction risk එකක් minimize කරන්න use කරන technique විදියට. That is forward contracts and currency options. This price adjustment and borrowing and lending, we are not discussing in that way, but you can get some sort of idea when you are referring your recommended textbook. Api මේක කතා කරන්නේ මේ price adjustment එකයි borrowing and lending in foreign currency එකයි, but we give more focus on currency option and forward contract to minimize or manage transaction risk. Okay, so that's the basic thing we are going to deal with in the transaction risk. Right. So in the transaction risk, first we are looking at the forward contract. Right. So forward contract, we can see the forward market hedge. Right. We can see under the forward market hedge. So now look at this example. Right. Now we are already familiar with the forward market. Therefore, I don't see that we need to discuss one by one in here. But if you need more detail with the forward market contract, you can refer the session number 4 again to identify how forward market can be transactions are occurring. But here, let's see how hedge is going to place on. Right. So the suppose an importer in USA want to pay 100,000 pound in 3 months for a good he imported today. That is the same thing we are knowing. And so today's spot rate is given like per pound $2. Right? Now importer could buy pound 100,000 forward for delivering and payment in 3 months at the today's 3 months forward rate. Right? So only thing he can do is he can enter into the forward buying contract, right, in order to buy pound 100,000 in 3 months at a pre-specified rate agreed today. So what is the pre-specified rate we agreed today? That is a forward rate. Right? So when he enter into the agreement, so in the market, pound is at 3 months forward premium. එතකොට යා agreement එක එන වෙලාවේ pound එක තියෙන්නේ forward premium එකක් විදියට for a 4% per year. Then you can calculate the forward rate, right? This is per annum, okay, per year. This is for 3 months, you know it is a 1%. So then forward rate in between pound to dollar, it getting as per pound $2.02. Right? Or pound per dollar $2.02 හම්බ වෙනවා forward premium එක less because forward pound is at a forward premium. Right? So at the end of the 3 months, the importer has to pay $202,000 in 3 months for the pound 100,000. එතකොට යා මාස 3ක් අවසානයේ මේ pound ලක්ෂ ගන්න යාට ගෙවන්න සිද්ධ වෙනවා $2,02,000. Right? If he pay it in today, he might be getting $200,000. එතකොට යා අද ගෙවුවා නම් මේක spot transaction එකක් වුණා නම් යා ලක්ෂ දෙකක් ගෙවලා pound 10,000 settle කරන්න තිබ්බා. But this is happening for a foreign exchange market and you have to pay in 3 months. Then we don't know what will happen to the exchange rate after 3 months. The exchange rate එක මාස 3ක් යනකොට මොකද වෙන්නේ කියලා අපි දන්නේ නැහැ. Therefore, he entered into the forward buying contract. Right? So he agreed to buy pound 100,000 after 3 months with the pre-specified rate agreed today. So that is the agreement rate. Agreement rate. Right? So when the 3 months is over, he pay $202,000. Right? You can calculate it with the 100,000. Right? So if we compare with the today's rate, right, that means other spot rate එකට කරා නම් එයාට ගෙවන්න තිබි $2,000යිනේ. Right? Sorry, $1,02,000යිනේ. It is 200,000 no. But with the risk of exchange rate fluctuation, we don't know what will happen in 3 months. Therefore, it is better to manage that foreign exchange fluctuation. So මේ මාස 3ක් යනකම් exchange rate එකට මොනවද වෙන්නේ කියලා අපි දන්නේ නැහැ. So it can be increased so more than this forward rate, or it can be decreased. Right? It depends on the demand and supply of the foreign currency. Okay? So it is better for a safeguard purpose, it is better to enter into the forward buying contract. In the hungak hondai forward buying contract එකට යන එක. So finally, what we looking as for hedging cost is the difference between actual we are going to pay and what we supposed to pay at the spot rate price. Spot rate actually compare. So we are getting hedging cost as $2,000. That is a 1% of $200,000 for 3 months. Right. Now, let assuming that without going with the forward contract, we are going to set off the transaction after 3 months at the given spot rate. Right. So after 3 months, right, suppose that the spot rate as dollar 2. Suppose that it is 2.08 per pound. I'm using these letters because I don't have a symbol here, right? So after 3 months, spot rate is $2.08 per pound. Then how much amount he has to pay in order to buy 100,000 pounds, right? So at that time, at that rate, right? At that rate, import has to pay $208,000, sorry, 208,000, no, 208,000. Sorry, 208,000 for pound 100,000. The pound 100,000 $2,08,000. Okay, so look at the loss he going to incur because of the ignoring forward contract. Forward contract එකට යන්නේ නැතුව මේ spot rate එකට set off කරන්න හිටියා නම් එයාට වෙන පාඩුව. Right? On the other way around, right? Assuming that at that time after 3 months spot rate is something like that. නිකන් හිතමුකෝ මාස 3ක් ගියාට පස්සේ spot rate එක මෙන්න මෙහෙම වුණා කියලා. If it is 1.98, that means dollar is getting appreciated against pound. Dollar එක appreciate වෙනවා. Right? Then at that rate, how much dollar he has to pay? At that rate, he has to pay 198,000 for pound 100,000. Right? When compared to the agreed rate, spot rate, agreement time spot rate, he incurring $2,000 loss. But we don't know, right? But we don't know whether dollar is going to be appreciate or dollar is going to be depreciate, right? Therefore, it is better to enter into the forward buying contract. So then he has to only incur that $2,000 as a hedging cost. But remember, as what we explained, right? We don't know exactly what will happen to the future spot rate. Okay, like what we discussed so far, if the future spot rate between dollar and pound like $2.08, then actually we are having some sort of benefit, right? අපි හිතමුකෝ මාස 3ක් ගියාට පස්සේ ඩොලර් එක පවුමකට ගෙවන්න ඕනේ ඩොලර් 2.08ක් නම් ඔන්න අපි ප්‍රොෆිට් එකක් ලබනවා, right? Because we incurring some profit, right? For an example, if I write like this, right? You put a macone, you can only. Okay, so here we take, right, after 3 months, spot rate, we take it as we take $2.08 per pound, right? If it is so, we have to pay $208,000, right? But we actually paying it as a forward. So අපි forward එක ගෙවන්නේ කීයද? Because of the forward contract, we actually paid $202,000. Right? We actually paid $202,000. So what is the profit we are incurring? Then the profit of entering forward contract is how much? The profit of entering forward contract is we are ended up with $6,000 profit. right? $6,000 profit එකක් එක්ක අපි යන්නේ. Okay, so therefore that is why called the true cost of hedging cannot be calculated in advance because it depends on the future spot rate, which is unknown at the time we are entering into the forward contract. Right? In the enter වෙනකොටම අපිට කියන්න බෑනේ මාස 3 spot rate එක මෙච්චරයි කියලා. We cannot predict that, no. Right? So therefore we cannot exactly say these are the true cost of hedging. Right? Actually, when compared to this is a benefit for us. So make up a benefit. Okay, so that is the way people are managing risk, right? In a transaction risk. Okay, that is a forward market hedging. Okay, so I also told you there are so many options in forward hedging approaches, right? So how we are taking advantage of these hedging policies? Like, are we going with the forward buying contract or forward selling contract? How we are going to decide it? So there are some clues we can prefer. Okay. So if the currency, that means if the domestic currency is selling at the forward premium, domestic currency forward premium, you have to do hedge with forward selling contract. So hedge කරන්න ඕනේ forward selling contract එකකට අනිවාර්යෙන්ම. Right? But if the currency is selling at a forward discount, right? If at that time the domestic currency is selling at a forward discount price, do not do forward selling hedging. Right? Forward selling hedging එකකට යන්න එපා. If you want to do with the forward selling hedging, right? Definitely you have to look at the domestic currency, whether it is selling at forward premium or forward discount. If the domestic currency is selling at the forward discount, right, it is better for you to hedge with forward buying contract. Hedge කරන්න, එහෙම නැත්නම් risk එක minimize කරන්න forward buying contract එකට යාම තුල. Right? So if the currency is selling at the forward premium, it is better to hedge with forward selling contract. If the domestic currency is selling at a forward discount, it is better to hedging with forward buying contract. So these are the hedging policies to take advantages, right? So simple explanation regarding how we can take advantages using hedging, right? So another form of hedging in the we are talking about the transaction risk that is coming under the forward contract also. Okay. We can go with money market hedge. Right? So under the forward contract, we know we are going to forward buying contract or forward selling contract based on the requirement as well as looking at the forward premium or forward discount rates. But when we are coming with the money market hedging, what we see in the money market hedging is it is simultaneously involvement of the borrowing and lending activities with two different currencies in order to lock in the domestic currency values with foreign currency values. Right? මේකදී අපි මොකද්ද කරන්නේ money market hedge එකේදී. money market hedge එකේදී වෙන්නේ අපි එක currency එකකින් ණයට අරගෙන ඒක තවත් currency එකකට convert කරලා ඒක අපි ආයෝජනය කරනවා. Right? When the investment maturity period is over, we convert that investment money into again the domestic currency and set off the borrowing. Right? We set off the borrowing. That is we call money market hedge. Right? Now you will get the more detail about looking at the example. අපි මේ example එක බලමු. එතකොට තේරෙයි මොකද්ද මේ money market hedging කියලා කියන්නේ. Now money market hedging is also coming as a one approach with the transaction risk minimization. Okay? Now this company, right? Its company would like to hedge its Canadian dollar 4,000 payable to another company, right? So now suppose that this specific company has to pay Canadian dollar 4,000 to Alka company after 3 months. 90 days mean 3 months. Now you are having this particular information. Many information you are having spot rates between Canadian dollar and US dollar. You are getting bid rate and ask rate. Now you know how to calculate, how to write bid and ask rate if you are getting this sort of exchange rate quotation. Also, you are having forward rate in between Canadian dollar and US dollar for 3 months. Right? And also you are getting interest rate for a Canadian dollar denominated assets as well as a US dollar denominated assets. Right? Here also you are getting two rates because that is lending rate and borrowing rate. Right? අපිට ණය ගන්න පුළුවන් rate එක සහ ආයෝජනය කරන්න පුළුවන් rate එක තමයි මේ තියෙන්නේ. So borrowing rate is higher than lending rate. That is normally banks are doing. අපිට ණය දෙන rate එක වැඩිනේ. අපි ආයෝජනය කරන rate එකට වඩා. Your saving rates are lesser than borrowing rates. Right? So here also you are having US dollar denominated buying rate, sorry, borrowing rate and saving rate. Okay. So here it says, right, borrowing rates and second one is a lending rate. මේක තමයි බැංකුව අපිට ණයට දෙන එක, මේක තමයි බැංකුව අපෙන් ගන්න ආයෝජන වලට ගෙවන ගාණ. That is lending rate. Now, before looking at the options in the money market, let's try the forward market hedging. Right? Let's try forward market hedging. So if we are going with the forward market, what we can do is we can enter into the forward buying contract to purchase Canadian dollar 4,000 after 3 months with the rate of, what is the rate? Canadian dollar මිලදී ගන්නවා මොකක්ද rate එක? That is the forward rate here. That is the forward rate ask rate. ඒක තමයි බැංකුව අපිට දෙන forward rate එක. ඒක තමයි බැංකුව අපෙන් ගන්න forward rate එක. Okay, if you are going to buy, this is the ask rate given by the bank. So that become a buying rate for us, right? So then after 3 months, we have to pay US dollar 3,784 in order to buy Canadian dollar 4,000. Canadian dollar 4,000 ගන්න අපිට මාස 3ක් යනකොට ගෙවන්න වෙනවා forward contract එකට අනුව US dollar 3,784. Buy forward Canadian dollar at ask rate. Right? Now this is a forward market hedging. Right? Now let's look at what is the money market hedging. Okay, actually what we know as money market, it involves simultaneously borrowing and lending activity. Right? Now let's see. So this particular company or whatever the importer can borrow US dollar denominated loan, US dollars වලින් යාට loan එකක් ගන්න පුළුවන් at 5.5 per annum rate. That is for 3 months it is about 1.375%. අවුරුද්දට 5.5 නම් මාස 3ට 1.375ක interest rate එකකට යාට ණයක් ගන්න පුළුවන් US dollar values වලට. So that is here. That is buying rate. Okay. And he can then convert that US dollar value into Canadian dollar by using today's spot rate. That is today's ask rate. Right? Then simultaneously, he can invest that Canadian dollar amount, okay, for a 3 months investment plan. ඒ ගත්ත Canadian dollar amount එක යාට invest කරන්න පුළුවන් මාස 3කට at the lending rate of 4.64% for a Canadian dollar. Right? This is a Canadian dollar lending rate. Right? That is for 3 months, it is 1.16%. Right? So since this particular importer need Canadian dollar 4,000 after 90 days, right? What would be the present value of that amount if you're going to invest that particular amount for a rate of 1.16%? 1.16 අනුපාතයකට එයා යම් කිසි මුදලක් ආයෝජනය කරොත් එයාට අවසාන වැලියු එක එන්න ඕනේ $4,000. ඒ කියන්නේ මේ $4,000 තමයි future value එක. Then what would be the present value of that? That is a finance, right? Not the international finance, that is a financial management. So then you have to invest Canadian dollar 3,954 in order to obtain Canadian dollar 4,000 after 3 months. අනිවාර්යයෙන්ම මේකේ future value එක එන්නේ එතකොට $4,000 Canadian dollar. right? So that Canadian dollar amount is exactly equal to US dollar amount 3,729 when we converted it into the ask rate. එහෙනම් යාට කැනේඩියන් ඩොලර් 3954ක් ආයෝජනය කරන්න US ඩොලර් ඕනේ 3729. Okay, so he borrowed $3,729. එතකොට යා US market එකෙන් ගන්නවා $3729 at the rate of 1.375% for a 90 days. Then how much dollar he has to pay in order to lend that amount? That means in order to lend that amount into the Canadian dollar market, that is US dollar 3,780. ඒ කියන්නේ Canadian market එකේ dollar 3729ක් ආයෝජනය කරන්න නම් අයියා dollar 3729ක් ආයෝජනය කරන්න in order to obtain Canadian dollar 4,000 after 3 months. Then he has to borrow US dollar 3,780 from US market while paying interest rate of 1.375 for the 3 months. Right now, this is the amount he going to pay actually for the $400,000 into 3 months. The මේකනේ අවසානයේ එයා ගෙවන මේ amount එක. So this is the dollar amount actually he is going to pay in order to buy Canadian dollar, in order to buy Canadian dollar 4,000 after 3 months. After 3 months. Right? Now, what is the hedging cost? Actually, hedging cost is this 3,780. Okay, so hedging cost of payable using the money market hedge is actually 3,780. But if you go with the forward market, he has to pay 3,784. Yeah, forward market. In our previous slide, we identify that he has to pay $3,784 in order to buy Canadian dollar 4,000 after 3 months. But what he actually paid today is, today he paid US dollar 3,780 to buy Canadian dollar 4,000 in after 3 months. So money market hedge is more profitable than forward market hedging. Right? You see, but the only thing is you have to borrowing and lending has to be done simultaneously. So that process is a little bit complicated, but you definitely or most probably ended up with the profit. Then forward market hedging. Forward market hedging එකකට වඩා money market hedging එකේ වාසිය වැඩි, but the only thing is the process is a little bit complicated because you have to borrow it, you have to calculate the present values in the future borrowings, right? Then after getting borrowings, you have to lend it at the same time, right? And there should be a different interest rate differences between two markets. So there are so many preconditions has to be fulfilled. But people are doing money market hedging in order to minimize transaction risk. I believe that you understand the meaning of money market hedging and forward market hedging in order to minimize the transaction risk. Right? And other option, we look at the managing the transaction risk is the currency option approach. The forward contract under the forward contract, forward market with the money market as well. Right? Forward market hedge with the money market hedge. Right? And the next option is we can go with the currency options also. Right? So in our session number 4, we identify that there are two types of option. We can say currency put option and currency call option. So under the currency put option, it gives buyer the right, but not the obligation to sell the specific amount of foreign currency at a pre-specified price up to the option expiration date. Right? That is option. You know the difference between option, futures, and forward. So currency call option also, it's give buyer the right, not the obligation, to buy foreign currency at a pre-specified rate up to the expiration date. Right? Now our question is how we can use this currency options to minimize transaction risk. Right? Now look at this example. Now this example says you can go for a call option, right? If a firm has offered to buy foreign assets, like for an example, they have to buy foreign assets in another firm, right? At a fixed foreign currency, that firm asset is given, but it is uncertain in that organization firm is not sure whether they are going to win the bid or not. අපි සාමාන්‍ය මොකක් හරි දැන් මිලදී ගන්නකොට වෙන්දේසියක් වගේ කරනවා නම් බිඩ් එකක් දෙන්න එපේ. අපේ වැලියු එක පෙන්නන්න කියන්න ඕනේ. But until the bid date we don't know whether we receive the assets or not. Then better option is you can buy call option agreement, call option contract, right? If you win the bid, right, you can buy the foreign currency at the currency option rate and set off the transaction, right? So the firm can lock in the maximum dollar price for a tender offer while limiting its downside risk to call premium in the event its bid is rejected. But unfortunately, if the bid is not win, assuming that their firm bid is not having any opportunity to purchase that assets, then win is going to reject. Then only thing he need to do is expire the call option. Call option expire karna. The loss he incurring is the premium he paid when the call option agreement signed. So අපි දන්නවා option එකකට යනකොට premium එකක් pay කරන්න ඕනේ. Right? So premium එක අපිට නැති වෙනවා අපි agreement එක expire කරොත්. Okay. So like that kind of transaction risk, we can enter into we can use currency options to minimize the transaction risk. Right? So ගොඩක් කරාට currency option එක use කරනවා ඔය වගේ මේ auction prices වලට යනකොට, because they definitely don't know whether they are receiving that asset or not, whether they are going to enter that transaction or not. The transaction එක හරියට දන්නේ නැහැනේ වෙනවද නැද්ද කියලා. So uncertainty is there, right? The transaction uncertainty is there. Therefore, it is better to go with the option, right? If the bid is win, they can exercise the option. But if the bid is rejected, they're definitely going to expire the option. That is the unique characteristic in currency option, because the buyer has the right to exercise the option or expire the option. Option option එක activate කරන්නත් පුළුවන්, එහෙම නැත්නම් deactive කරන්නත් පුළුවන් currency option agreement එකට අනුව. And that is why people are going with the currency options. Right? So in the chapters 4 also you might be having question why people are going with this currency futures and currency option, right? Why people are specifically focusing on currency options agreements. So these are the reasons. If we are uncertain about the transaction acceptance or not, it is better to go with the currency options. ඒ වගේ uncertainty එකක් තියෙනකොට අනිවාර්යයෙන්ම transaction එකක් තුල යන්න වෙන්නේ currency options වලට. Okay, so that is the basic information regarding how currency options are used in hedging to minimize the transaction risk. Now we are having another good question, good debate regarding what are the occasions that people are considering or organization or firms are considering whether we are going with the forward related hedging or currency option type of hedging. Right? So මෙතන නිකන් අපිට පොඩි doubt එකක් එනවා firms එහෙම නැත්නම් ආයතන කොහොමද hedging use කරන්නේ forward contract or currency option use කරගෙන. But based on this example, මේ example එක අනුව you get understanding. Right? So get more understanding in this. Okay, the ideal use of forward contract is when the exposure has a straight risk reward profile. So when, in what occasion we can use the forward contract? In occasion where we know exactly, right, where we know exactly that we have to pay this amount after the certain period of time. Like after 3 months, we have to pay $100,000. Then we know exactly after 3 months, we have to pay $100,000. So at that kind of transaction, we can go with forward hedging. Forward hedging. Right? But in what we discuss like here, this transaction has some sort of uncertainty, whether we are receiving the bid or not. Okay, so the currency options are a good hedging tool in a situation in which the quantity of foreign exchange to be received or paid out is uncertain. So until we receive the bid, we don't know whether we are going to pay that amount to buy this asset or not. Right? Therefore, it is better to go with the currency option if the foreign exchange values are uncertain. Right? The quantity of foreign exchange to be received or paid out is uncertain. Okay. When the quantity of foreign currency cash outflow is known, that means we know exactly how much paid in future, it is better to go with forward buy contract. Right? Forward buying contract. It is go with forward buying contract. But if the quantity is unknown, like our bid transaction, right? Example, therefore it is better to go with call option contract. Call option contract. And other thing is when the quantity of foreign currency cash inflow, that means amount we received is exactly known. That means if we know that exactly after 3 months, we received $100,000, then it is better to enter into the currency forward selling contract. Forward selling contract. But we don't know exactly how much we are receiving in future. Okay, so it is better to go with put option in currency option market. Put option currency option market. But if we have the combination of this kind of risk, right, that means partially we know this amount we received, but totally we don't know how much we are received exactly. Yam ප්‍රමාණයකට දන්නවා මේ amount එක exactly අපිට ලැබෙයි, හැබැයි total amount එක දන්නේ නැහැ. Right? When the quantity of foreign currency cash flows is partially known and partially uncertain, right? Therefore, we can use forward contract to hedge the known portion, and we can use the option currency option contract to hedge the unknown portion. Right? Then we can use a combination of forward contract and currency option contract. So this is how people are hedging, how people are minimizing transaction risk by using forward contract and currency options. Okay. So that's the explanation regarding transaction risk minimization techniques in hedging. So I believe you understand the things. Now you can see some kind of quotations given by the well-recognized companies regarding hedging. Right? Please read them and identify how they are using the selective hedging, how they are select different hedging approaches in order to minimize their transaction risk. Okay, right. So next we will going to discuss about the next foreign exchange risk and how it is going to minimize, that is managing economic risk.